What are stocks? A stock, usually referred to as equity, is a type of investment that denotes ownership in a portion of the issuing company. Shares, also known as units of stock, entitle its owners to a share of the company's assets and income in proportion to the number of shares they possess. How do stocks work? In order to raise money to run their operations, corporations issue stock, and the holder of that shares, known as a shareholder, may be entitled to some of the company's assets and earnings. Based on the proportion of shares an investor owns to the total number of outstanding shares, a shareholder is regarded as an owner of the issuing firm. If a corporation has 1,000 outstanding shares of stock and one shareholder has 100 of those shares, that shareholder would possess and be entitled to 10% of the company's assets and profits. Legal separation between corporate property and shareholder property reduces both the corporation's and the shareholder's liability. A judge may order the sale of every asset owned by the corporation in the event of bankruptcy, but a shareholder's assets are not in jeopardy. Despite the fact that the value of your shares may have decreased, the court cannot order you to sell them. What is ownership of shares? Shares issued by the corporation are what shareholders possess, and the corporation is the legal owner of a firm's assets. It is untrue to say that you own a third of a corporation if you only hold 33% of its shares. You do, however, hold a third of the company's stock. When you own stock, you have the option to sell your shares to another party, participate in shareholder meetings, and earn dividends if and when they are paid out. Your voting power increases if you hold a majority of the company's shares, allowing you to indirectly dictate the company's course by choosing the board of directors. Being a shareholder is significant because it gives you the right to a share of the company's profits, which are the basis of a stock's worth. The percentage of profits you receive increases with the number of shares you possess. Common stock and preferred stock comparison. The two primary stock categories are common and preferred. The owner of common stock often has the right to vote at shareholders' meetings and to receive any dividends the company pays out. Unlike common stockholders, preferred stockholders often do not have voting privileges but do have a stronger claim to the company's assets and profits. When a company needs to raise more money, it might issue more shares. Existing shareholders' ownership and rights are diminished as a result of this process, provided they do not buy any of the new offerings. In order to increase the value of existing owners' shares, corporations might also purchase back their own stock. How can I buy stock? Stock exchanges like the NASDAQ or the New York Stock Exchange are where equities are often bought and traded, NYSE. In most cases, investors will utilize a brokerage account to buy shares on the exchange, which will list the asking price, the offer, or the selling price, the offer. Among other things, the market supply and demand considerations affect the stock's price. How can stock ownership generate income? Dividends and capital gains are the two ways that stock ownership can generate income. Dividends are payments made in cash from a company's profits. Stockholders will get $5 for each of their 1,000 outstanding shares if the corporation declares a $5,000 dividend and there are 1,000 shares outstanding. The rise in share price is known as capital appreciation. A shareholder makes $1 if they sell a share to someone for $10 and the stock goes on to be worth $11. Is owning stock risky? Every investment has some level of risk. If market circumstances worsen, stocks, bonds, mutual funds, and exchange-traded funds could all lose value. When you invest, you decide how to use your financial resources. Market conditions or corporate actions, including whether to grow into a new industry or merge with another company, could impact your investment's value to rise or decline. Over the long term, historically, equities have outperformed the majority of other assets.